This BizNews production is brought to you by Brenthurst Wealth, a multi-award-winning, truly independent boutique wealth manager. Invest better with Brenthurst.
Boy, that's a tough act to follow with Rob Hersov and Alec. You always give me the toughest jobs, Alec. You wake me up at midnight in California and you ask me for my opinion. It's a huge privilege, number one, to stand here today. I'm a pretty simple ex-South African boykie. I'm still a South African citizen. But greetings from Wall Street and Beverly Hills. I'm a Boere Yoki with roots in Kimberley, Worcester. My grandmother was friendly with Engela Langenhoven in Oudtshoorn. So ek praat nog steeds 'n bietjie Afrikaans. I haven't changed that much. And like Rob, I'm still a deep patriot. You're right, I was just in DC. I've got Mr. Park's town on speed dial. At 2 o'clock in the morning, the WhatsApp blows up. Can we help? I'm very happy to help SA. Let me just take you on a quick emotional journey, because we are living through a new world order. The new world order, Alec wants me to talk about, is the tech revolution. My wife's an American. She was born and bred in Beverly Hills. She lives on Perplexity 24/7. She's driving me crazy with Grok and Claude and all the other AI apps, etc. There's also the investing revolution. I see my old friend Dries du Toit there from Sanlam, and we'll gesels a little bit about the investing revolution. It's coming to South Africa. It's been coming for 20-odd years. If I could just take a brief moment and tell you, I left this country after being tear-gassed at UCT as a young boykie in my 3rd and 4th year. I did business science. I got to the States, and they said, no, you can never make it here. You need fancy Harvard MBAs and all the rest of it. I was a very lucky boykie. I landed up on Wall Street. I'm still involved very closely in Wall Street. I worked at Solomon Brothers for a number of years, and also as a director with Barclays. Those guys aren't rocket scientists. You don't need 3 PhDs. You don't need MBAs from Wharton or Harvard. After about 3 weeks in the US, and this is for your kids, because I know there are a lot of gray-haired folks here. I'm very grateful to my mom and dad. That's why it's quite emotional to stand here. I was basically 21 when I left. They said, look, we'll see you on the next boat back if you don't make it there. 34 years later, I'm married to a lady from Beverly Hills, and I love coming back every single year. It's amazing what South Africa is all about. Peter Major over there, I listen to you with your nice accent, because I'm used to that accent. I'm not surrounded by that many South Africans overseas. And I get phone calls after the White House gemors, and they say, Americans don't know the word yes like, but they say, and what the F is going on over there? Is it all misstart and murder, or, it's sad. There's a lot of potential here, whether it's Plet or whether it's Hermanus, and obviously I grew up in Cape Town, and I'm still a VP on a steener, and Stormers on a steener. So can I just say, don't lose your roots. And I've told that to many ex-South Africans and folks who want to give back. There's a massive diaspora overseas. This country, one of the weakest things about SA is they don't embrace their diaspora. Look at Christine Lagarde, who you know personally. They brought this lady back to France, man, to be their finance minister, to be the head of the IMF, the head of the ECB. Embrace slim bliksems that are overseas. They've learned the tricks of the trade. If I tell you, I have a colleague in the audience. She's the one who wants me to talk about the investing revolution. I'm going to get to at least in a few moments. But there's so much talent out there. And what I need to just say to you is remain humble. The solution for the New World Order, just to follow on Rob, there are 2 big things. There's an investing revolution that we've all been living through. Some of us have been sleepwalking through it for the last 20 years. It's called the indexing revolution. There is literally $10 trillion that has left the active traditional fund management industry and has moved to index fund or ETF investing. Again, this is democratizing investing. If you want to buy into the US fantastic story that's going on, and we can talk about how the US is resilient, you don't have to go and find hotshot fund managers in America. 90% of American fund managers lose to the S&P 500 or even the Dow Jones. The same is true in Europe, man. And if you look at the South African fund managers, I mean, Sai's a smart as hell chap, but he'll even admit to you, the vast majority of the SA fund managers, how are they going to now clop the S&P 500? There are a few smart guys out there. If you look in the 1980s, 1990s, insider trading wasn't very well regulated. I had friends on Wall Street that go to the 19th hole, the 18th hole, in places like Scarsdale or Augusta, Georgia, if you could get in there. And there were lots of lekker secrets that were being passed on. It's now incredibly difficult. We have 10,000 stock analysts in the States. It's almost literally a needle in a haystack to find the one or two active fund managers on a 5-year basis that can outperform. So what are we trying to do? Find a few stars. The truth is most of those stars turn into comets, sadly. So I think my one takeaway, Alec, I've got 14 minutes here, is be poop scared of stars out there. There are many UK stars, you and I both know them. They've blown up in recent times. One or two have even been arrested. And the fancy names that get bandied about, like Peter Lynch, who I also grew up with from Fidelity, these guys made their geld in the good old days in the 70s and 80s. Peter made his money in buying up things called savings and loan banks. In those days, there weren't 10,000 analysts. So this investing revolution has been going on now for well over 30 years. You've probably heard of firms like Vanguard, but what you don't know is that we've partnered with one of the biggest three for the last 25 years. It's called State Street. 3 of the 5 biggest investment firms on the globe, including BlackRock, who Alec knows well, are indexing firms. The state of the wakkerskrik. You don't have to be as smarty pants and try and find hotshot fund managers and hedge fund managers necessarily in the States. Very few consistently outperform. If I literally showed you the numbers, he won't let me put up charts here, but basically 90% of US fund managers completely lose out to broad-based indexes. And the same is true actually in the UK and across Europe. So that revolution is partly because investing is a zero-sum game. What does zero-sum mean? For every winner, for every genius like Cy Jacobs, there are losers out there. And if you take costs into account, most active fund managers are quite expensive. It doesn't mean that they're domkopper, they're not. They've gone to Oxford and Harvard, etc. But they're running a 105-meter Vetloop. My index funds and other guys like Vanguard, State Street, we're running basically just 100 meters with very cheap, low fees, low cost, 20, 30 basis points. So we actually have an unfair lead, actually, in many cases. I just want to say there's a collaboration overseas. You said to me, Ant, what's happened to big pension funds, institutions overseas? When they get into tech investing or they want to get into broad equity investing, they mostly use indexation as their broad basis, basically the foundation of the house. Above that, they'll put satellites, and they'll put clever guys that we saw yesterday on the panel on there, whether it's Sean or Tsai or other people around it. But it's the foundation. Keep it cheap, low cost, and broadly based. And it's a way to be very diversified. In this new world order with Mr. Trump right now, no one can predict oil prices tomorrow or the next day. And frankly, we can't predict sectors either. I'm here to talk a little bit about AI and tech. My point is remain humble. I've seen so many people get burnt overseas by chasing the next sterretjie that turns out to be another comet. So I think I've learned as a Buddha, you don't try and be too slim. The slimmest guys I've seen in the States, typically after about 5 to 6 years, they tend to blow up. In many cases, they're over-leveraged. They've shorted all kinds of crazy stocks. They look wonderful for a few years. Money flows their way, and you wake up literally a couple of years later, and they're no longer around. So that investing revolution continues. Satrix, it's very encouraging to see what they've done in South Africa, but it's still early stages. You can actually invest in far broader indexes, even in sectors, even in themes, even in tech, in a much more low-risk, diversified manner. So it's a collaboration. You can have active and passive. It's passé, as my old friend from Stellenbosch, Mr. Rupert, likes to say. It's passé to attack indexing versus active. Who's better, who's worse? Over 10 years, the story is pretty true out there that 90% of the active boykies just don't perform. It's largely based on their cost. They're churning their portfolios. 1 minute, the American fund manager on Wall Street's buying IBM, and then next week he's selling it. There's an internal cost of about 1 to 1.5% additional drag on their performance. So it doesn't mean that they're not clever guys. It's that churn, Alec, that really reduces the returns. I just wanted to touch on one other thing about America, since Rob went on about it. Someone who lives like me in Beverly Hills and travels to Wall Street back and forth, California is a Democratic stronghold at the moment. Our governor, Gavin Newsom, has thrown out Elon Musk. He's thrown out another mate, David Sachs, who's Trump's chief of AI. David was born in South Africa, by the way. Very smart man. So a lot of Silicon Valley is actually leaving California because of high taxes. I don't think the Democrats have heard of the Laffer curve, perhaps, which basically means if you keep taxing people, your revenues go down. My point is, things aren't going to change overnight in the midterms. Trump has a 50-50 chance, as Rob said, of winning. But the main point is America's resilient. We're expecting 3.5 to 4% GDP growth this year. My South African friends said, yeah, if we could just get half of that, we'd be envious. So America is actually not just resilient, but it's actually growing far faster than many of you guys predict. I'll give you another thing. Tailwinds. Trump fired the head of the SEC. He fired the head of the Federal Trade Commission. These guys were blocking huge deals in my space. Particularly, we run about 20 index funds, equities, bonds, property, but also tech. And our tech megatrend fund, about 25 of those holdings were blocked from making acquisitions. I'm talking about the Microsofts, Anthropics, and all kinds of other names. In fact, just 3 weeks ago, I was touring SpaceX, for example. It's a fantastic business, SpaceX. The CFO of SpaceX is a common friend. I know him. He said, Anthony, why the Starlink Gemors, he called it in South Africa. Americans just can't understand why on earth we're keeping them out of this country. There's a huge amount of goodwill. The reservoir of goodwill on Wall Street is unbelievable. There's a mountain of cash ready to come and invest here. And that's the reason why I've got Minister Parks, Tao, and others on speed dial. They can thread the needle, step up to the plate, as the Ambassador Bozell said, and actually strike a deal. So I'm a bit more optimistic than Rob. I know he's a hard act to follow, but there's actually a deal waiting to be drawn with the Americans. They're deal makers. The Commerce Secretary Lutnick, Bessent, who is the Treasury Secretary, a number of these other guys, they're basically business people. And as I say, they fired the head of the SEC, the Federal Trade Commission, a bunch of other bureaucrats to actually enhance deals in the AI space, in the tech space. If I can just briefly talk about tech and the resilience in America. We've got rate cuts coming now. We've got at least 2 rate cuts this year coming. Trump, as you know, has appointed Kevin Warsh to be the new Fed chair. He's a hell of a business-friendly guy. It's an expensive risk to take to underweight America. I know that there's some fund managers in the audience may disagree with me, but you underrate America at your peril. I mean, right now, just the last 2 weeks alone, it's not just the rand falling, but it's also the flow of dollars. I can tell you money is flowing back into the US, and there's a lot more optimism there. It's not just inflation. There's something else that your media, Alec covers this, but most don't. The fiscal stimulus is in the trillions of dollars in the next 2 years in America. Trump has cut tax rates, so the average American's got another $1,500 roughly in their pocket over the next year. Where do you think that money is going? Consumer spending. Then he's also reduced taxes on capex. He's allowing big companies to write off all their capital expenditure in 1.5, 2 years. That's partly what's driving the AI boom, because obviously data centers, they can write off the costs pretty quickly. So I know there are going to be winners and losers in AI. I'm not going to stand here and tell you I have all the secrets. But perhaps what I should say is this indexing revolution, it's broadening out. In the tech space, we do tech investing, but we do it broadly. We equally weight across AI, cloud computing, cybersecurity, all these areas, because they're interconnected. There's tech convergence. The days of saying, look, I only want the Mag 7, that's hell of a short-sighted. These Mag 7 are buying and acquiring more businesses in other areas, such as defense technology. Just last month, our best performing sector or sub-theme was defense tech. It was up 21%. Last year, blockchain was up 33%. Many of you are sports crazy, because I know South Africa has always been sports mad. Like the Currie Cup or the Premier League, every year there's a different top of the pops. 2 years ago, it could have been robotics. Last year, I mentioned blockchain. 3 years ago, it was a different area completely. It was cloud computing. You can't time these things, but they are interconnected, and ignore it at your peril. So the New World Order, Alec, just to summarize, 5 minutes, global index investing has essentially taken over. If I can just compare to a crocodile's jaw, when I started as a young boykie, active was over here. We had all the big life insurers that we all know here. They were 99% active. Everything was actively managed. And the crocodile's jaws have closed, and indexing is now taking 60% of 401k pension money, retirement annuity money in the US. So it's a sea change. And let's be frank about it. There's a reason. Americans were gutful in 2008, 2009. Why were they gutful? They had bet the house on some sexy active fund managers, and a lot of them lost their shirts. And I won't mention certain names, but what actually transpired was this revolution caught speed. And bottom line is, today, most insurance money, most pension money, retirement money, the vast majority is using indexing, whether it's in the tech space, whether it's equal weighted indexing or market cap. It's broad-based. We've actually brought a couple of products into South Africa to help people with RAs and ILAs, where it's low cost and you essentially have a feeder fund situation, whether it's MSCI World or whether it's in the tech space where you equally weight these different sub-themes like robotics, like social media, like digital entertainment. Sure, we have the big names. We have the Netflixes, the Amazons, Alphabets, and we'll talk about it, I guess, Alec. But you can't time these things. And we've actually said you've got to have mid-caps in there, some small caps, and also tech is a global story. The Americans are making acquisitions in Asia. 20% of our tech megatrend fund, by the way, is in Asia. Why? Because that's where per capita the biggest usage of cyber is. At the moment, we see because of 5G and 6G, per capita Asia's even got the fastest usage and adoption of AI, believe it or not. So it's a global story, and the days of just buying the Mag 7 and going to sleep, I think, is very short-sighted. And I'll just summarize one last thing about where we see the AI spend. It's about $3 trillion this year in AI spend. Yes, it sounds enormous, but it's a huge infrastructure build-out. This is part of a new age, digital age infrastructure spend. Some people say it's overbuilt. Are we in for a boom and bust situation? Just to compare, when we started our careers in 2000, PE ratios averaged 65 to 70 times earnings. Share prices went up 500% in the 4 years before the crash in 2000, roughly 500%. Today, we're up about 130%, give or take. The PE on funds like ours, around 20 times earnings. Maybe the NASDAQ's over 33, 34 times because they're very concentrated with risky Mag 7 or FANG holdings that make up half of the NASDAQ. There are ways to invest globally in a much lower risk manner. Whether it's tech or global equity, for example, you can equally weight the S&P, equally weight tech holdings. Again, this has come to the US in spades through the insurance industry. We work with AIG and Transamerica, ING, Zurich Life. They all use indexing. They can hedge the downside. Indexing is a huge way to reduce risk. It's transparent every single day of the week. You turn on CNBC or Bloomberg. In America, it's $300 billion a year now going into these things called index annuities. They didn't even exist 20 years ago. Discovery is actually involved in the States with a firm called John Hancock, and they do something which has become also very sizable called index life insurance. You have a pocket of your life insurance, so when Donald Trump passes away, that life insurance has grown tax-free as a death benefit, and guess what? It's all indexed. So the indexing revolution is rolling on hell of a fast. Please God, it will come to SA in a low-cost format. It's encouraging to see Satrix. We're actually 25 years old ourselves. It's not new to many people, but trying to find the needle in a haystack is hell of a difficult. And Alec, just lastly, just thank you very much for the opportunity. For me, it's an emotional homecoming, as I said earlier. We're here to help. There are many South Africans of goodwill on Wall Street who I talk to all the time. They'd love to help. We're trying to get a trade delegation to the States. We're friendly with guys in the White House. Herman and I, by the way, are in the same business group. There's a global business group called Young Presidents, YPO, Young Presidents Organization. It's hell of a powerful in the States. And they immense goodwill towards South Africa. I'm telling you, there's probably more than $1 trillion of cash on the sidelines right now, keen to invest in SA. You heard a little bit from the ambassador yesterday. This country's got immense potential, and Americans actually love SA. They just don't like seeing what happened in the White House 8 or 9 months ago. It was a bit of an embarrassment. So we're holding thumbs that we can get a trade deal done. Guys like me behind the scenes are really trying to assist and to just remain optimistic. I'm a bit more of an optimist, as I said, than Rob perhaps at the moment. But yes, like there's not just the potential, but when you talk about your wealth, just ask your advisors, your investment advisors, what about indexation? Why aren't we hearing enough about it? if all the folks in Europe and in America are using ETFs and index funds, it's Tatum Tavakaskruk. A lot of our financial advisors are fantastic guys. They do this. I know people like Magnus and others embrace both indexation, which is called passive, and active, and I just salute you and all the other advisors who've jumped on that. Baie dankie. Thanks for your time.
This BizNews production is brought to you by Brenthurst Wealth, a multi-award winning, truly independent boutique wealth manager. Invest better with Brenthurst.